According to the National Association of Realtors, 1 out of every 10 real estate transactions are terminated due to a low appraisal. If you're purchasing your property with a lender is not going to issue you your mortgage for anything higher than what the appraised value of the property is. So a low appraisal can pose a problem because if the appraisal comes in low but the contract price is up here, there's an issue. In hot marketplaces, it's common to see more and more appraisal issues because you're having an influx of buyer interest and property values that have a very aggressive appreciation level, and at a certain point in that time, it's not going to add up, and what we're seeing is basically an inflated value in the eyes of the appraiser. Now, there are ways to combat a low appraisal, and there are also some strategies that you can implement to help prevent a low appraisal from occurring. So today I'm going to give you 3 ways to really arm you with the best chances at preventing a low appraisal from occurring, and hopefully you don't have to deal with any of this stuff, but I will cover it after I give you the reasons. Strategy number 1 is to make sure that your real estate agent does his or her homework. Pricing has to be a strategy, and there needs to be data behind all of pricing. Otherwise, you're just slinging from the hip, and the chances of you running into appraisal issues are much higher than if your agent has done his or her homework and is able to show you what the current market conditions are to help advise you on how to price appropriately. Strategy number 2 is if you're on the buying side and you are asking for closing costs, it's important to realize what you are actually doing. By asking for any sort of concession, you're basically inflating the property's value and hoping that it appraises at the higher value. Sometimes it happens, sometimes it doesn't. So just be aware that what you're doing, the monetary amount that you're asking for your closing costs, is inflating the property's value. And strategy number 3 is in a multiple offer situation, be careful of the offer that you're submitting. You don't want to go too aggressive to where you're way over asking price unless the property is worth it, because you might win the contract, but you might lose at appraisal. If your appraisal does come in low, that doesn't necessarily mean that's the end of the deal. Your real estate agent, whether on the buying or selling side, should know how to handle that situation and save the deal if there is a way. But it is important to realize that if an appraisal does come in low, a buyer and seller are really left with 3 options. Option 1, the seller reduces the contract price to the appraised value, therefore continuing the process at the appraised value. Option 2, the buyer and seller come to some sort of mutual agreement where maybe the seller reduces and the buyer comes up and meets at the middle and brings the difference in cash at closing. And option 3, the buyer has the opportunity to walk from the contract and retrieving his or her earnest money deposit, but therefore forfeiting any costs that were associated with inspections. Now, in my experience, most sellers are willing to reduce to that appraised value because they understand that that is the fair market value based on the appraiser. This is something that I would not bank on if I'm a buyer because you never know, and I have seen instances where a seller is very firm on that price, and if it appraises, great. If not, maybe they'll just hold out for another buyer and get another appraisal, or a cash buyer that is willing to pay more than what the appraised value of the property actually is. So prior to listing your property or prior to submitting that offer, just be a little bit more informed about what the market is doing and the value of the property that you are buying or selling. Because at the end of the day, without data, you're just another person with an opinion. Oh, and I'll see you next Monday.